In a recent Schwab Network interview, Dan Ives, managing director of equity research at Wedbush Securities, delivered a powerful message to investors gripped by fear. This tech sell-off isn't about fundamentals, it's about panic. While uncertainty dominates the headlines, Ives argues that we're in the early stages of a decade-long AI and tech revolution, with companies like Nvidia, Tesla, and key cybersecurity players standing at the forefront.
Time to bring in Mr. Dan Ives, Managing Director of Equity Research at Wedbush Securities. On a day like this, when it seems Powell is going to give us something to go with, at least to get us to stop selling, Dan, the question is, which in your list of coverage is the best buy right now?
My opinion, this tech sell-off, I think a lot of it is more fear-driven than fundamental. And I think that continues to be what we're talking about. I mean, in Asia, demand to supply is 15-1 for Blackwell. Last time we were there, it's 12-1. So when I look at semis, you look at names like Nvidia, you look at software in terms of some of the hyperscalers, you look at names, really across what I view as sort of the AI revolution names, Palantir among them, cybersecurity. I think these are the names that you own here playing the theme. The theme is not cracking. That's more perception.
Okay. What did you learn from GTC and Nvidia yesterday and Jensen Huang? Dan, please correct me if I'm wrong. It seemed like it was generally kind of an update on themes we mostly knew about and some pretty impressive numbers of how fast their chips are running. But was there anything additional?
Well, first of all, I think being at GTC in terms of our team there, I mean, the developer feedback, it's off the charts. So I think it all comes down to the use cases, and those are exploding. In terms of Jensen's keynote, I think it's really showing the holy grail is physical AI, autonomous robotics. Clearly talking about Rubin, some other sort of initiatives down the road. But look, they own AI when it comes to from a chip perspective. And I think that is sort of planting the flag, showing that, like, despite all the fears, some of the DeepSeek wounds and everything else, that's sort of Jensen out there, hearing from the godfather of AI himself saying, look, it's our world, everyone else paying rent.
The stock market has been rough lately. Tech stocks, once the unstoppable drivers of this bull run, have faced intense selling pressure. The Nasdaq recently dropped over 2% in just one session, shaking up investors who had grown used to constant gains. But, according to Dan Ives, one of Wall Street's top analysts, this isn't a moment to panic. It's a moment to buy. He believes the recent dip is fueled by fear, not actual business fundamentals. The AI revolution is far from slowing down. In fact, demand for cutting-edge technology, advanced semiconductors, artificial intelligence, cloud computing, and automation is at an all-time high. In Asia, demand for top-tier AI chips is outpacing supply by a staggering 15-1, up from 12-1 just a few months ago. That's not a bubble bursting. It's a market that's only heating up. That's exactly why some of the most innovative high-growth tech stocks are now in prime buying territory, according to Ives. These companies aren't just leaders in their industries today. They are shaping the future of technology for the next decade. They are the backbone of AI, automation, and next-generation computing. Yet, despite their strong fundamentals, the market is undervaluing them due to short-term economic concerns. For investors seeking high-conviction, long-term winners, this is an opportunity you don't want to miss. The three stocks we're about to reveal, according to Ives, are the ones poised to dominate in the coming years. Before we dive in, if you're finding this information valuable, a quick like and share would mean a lot. It helps us reach more people and keep creating content like this. And if you're new here, subscribing ensures you don't miss out on future insights. Let's aim for 300 likes. Your support really helps this channel's growth. When it comes to AI, Nvidia isn't just part of the revolution, it's leading it. This company is the driving force behind artificial intelligence, powering everything from self-driving cars to generative AI and even humanoid robotics. Despite its clear market dominance, recent stock volatility has created one of the best buying opportunities in years. Nvidia has evolved far beyond being just a semiconductor company. It's transforming into a powerhouse, shaping the future of AI across multiple industries. At its latest GTC event, Nvidia showcased its expanding vision beyond traditional chip cycles, tapping into high-growth revenue streams. One of the most exciting developments, AI-powered robotics. Nvidia's Isaac GR00T is an open-source foundation model for humanoid robots, positioning the company at the forefront of an industry projected to reach $77 billion by 2032. But let's not forget what Nvidia is already known for. AI chips. The newly launched Blackwell Ultra is a breakthrough, offering double the bandwidth and increased memory, exactly what's needed to keep up with AI's explosive growth. Tech giants can't get enough of these chips, and supply can't keep up with demand. In Asia alone, Nvidia's AI chip orders are exceeding supply by 15 to 1. Yet after the GTC event, Nvidia's stock pulled back. Why? Because the market is mispricing the company, fixating on short-term worries instead of its long-term leadership. Dan Ives sees Nvidia as a $4 trillion to $5 trillion company in the making, and with its leadership in AI, robotics, and cloud computing, it's easy to see why. This kind of opportunity doesn't come around often. Nvidia has also been expanding its software and AI-driven services, which could drive even more long-term growth. With AI transforming industries like healthcare, finance, and autonomous driving, Nvidia is positioned at the center of it all. Investors who understand this shift will likely reap significant rewards in the coming years. Next up is Amazon. If you still think Amazon is just an online shopping giant, you're missing the real story. While most investors focus on its retail business, the real game-changing growth is happening behind the scenes in robotics, AI, and cloud computing. Amazon has quietly built one of the most sophisticated robotics and automation ecosystems in the world, and it's scaling these innovations in ways that could redefine industrial automation. The company's robotics journey began in 2012 with the acquisition of Kiva Systems, and today, Amazon operates over 750,000 robots across its warehouses, a number that has more than doubled in just 3 years. The impact? Faster shipping, lower costs, and soaring profit margins, which have climbed from just 2% in 2022 to over 11% in 2024. But Amazon isn't just using robots to improve its own operations, it's turning them into a business. Just like AWS transformed cloud computing, Amazon is now using AWS RoboMaker and IoT RoboRunner to help third-party robotics companies develop and manage their machines at scale. With the industrial robotics market projected to hit $60.5 billion by 2032, Amazon is positioning itself as the top cloud provider for AI-driven automation. Amazon is also heavily investing in AI-powered personalization and predictive analytics, ensuring customers receive highly targeted recommendations that boost sales and engagement. The company has been experimenting with generative AI models to further streamline logistics, improve warehouse efficiency, and optimize customer service interactions. Despite this enormous potential, Amazon stock has dropped 20% from its highs. Investors are too focused on short-term market fluctuations and missing the bigger picture. Amazon is sitting at the intersection of e-commerce, AI, cloud computing, and robotics. No other company has this kind of reach. Savvy investors know that moments like this, when Wall Street gets distracted, are golden buying opportunities. Rounding out the list is Alphabet, the parent company of Google. Google is a giant in digital advertising, AI, and cloud computing. Yet recently, investors have grown nervous about competition from AI-powered search tools. Some fear that AI chatbots could disrupt Google's search dominance, cutting into its ad revenue. But here's what the market is getting wrong. Google is far more than just a search engine. Despite the headlines, Google still controls over 74% of the global search market and remains the backbone of the digital advertising industry, which is set to grow at a 15.4% annual rate through 2030. That's massive revenue potential. Meanwhile, Google Cloud is emerging as a key growth driver, expanding at 25% annually with rising profitability. This alone could send Alphabet's valuation soaring. And let's not forget Google's AI innovation. The company is aggressively integrating its Gemini AI model across its services from Android to Google Search and cloud computing. With its vast computing power, infrastructure, and unmatched data advantage, Alphabet is positioned to dominate AI at scale. Even in a worst-case scenario where search revenue stalls, a detailed valuation analysis suggests the stock is fairly valued at $1.9 trillion. But if Alphabet continues growing its services at just 12% per year, it could be worth $3.25 trillion, 61% higher than today's levels. Google is also leveraging AI to revolutionize digital advertising, healthcare, and even quantum computing, making it one of the most diverse tech companies on the planet. Dan Ives argues that Wall Street is missing the bigger picture. Google isn't declining, it's evolving. And at today's prices, this stock is an absolute steal. The market's current fear is creating a rare window of opportunity for long-term investors. These companies aren't just adapting to the AI revolution, they're defining it. By looking beyond the short-term noise and focusing on their fundamental strength, you can set yourself up for exceptional growth. The future of technology is unfolding, and investing in these leaders today could dramatically reshape your portfolio. Don't miss this chance. Hit like, share, and subscribe to stay ahead of the curve. We've got more game-changing insights coming your way, so stay tuned. Thanks for watching.